Cipher Mining stock had a rough Thursday session, closing at $11.85 per share. That was a drop of 53 cents on the day, or about 4.3%. After several strong sessions earlier in the week, including a 7.5% surge on Wednesday, today's decline may feel like a setback for investors who are hoping the rally would continue without interruption. But the reality is that moves like this are part of the natural ebb and flow of markets, especially in high beta names like crypto miners. The key question isn't why Cipher went down today in isolation, but whether the reasons behind the decline suggest a fundamental shift in the story or just a pause in the momentum. When you break it down, there are several factors at play, and together they point to a pullback that looks more like healthy consolidation than a sign of deeper trouble. Let's start with the obvious context. Earlier this week, the Federal Reserve cut rates by 0.25% and signaled that as much as 3 additional cuts could be delivered before the end of the year. Markets initially cheered that decision, sending equities higher, Bitcoin steady near $115,000, and miners like Cipher sharply up. On Wednesday, Cipher rose by almost 8%, closing above $12 for the first time in the rally. But markets have a habit of overreacting in both directions. The old phrase "buy the rumor, sell the news" is one of the oldest cliches on Wall Street for a reason. Once the initial excitement about the Fed cut was priced in, investors looked around and asked whether the move really changed the underlying dynamics as much as they thought. Some of that enthusiasm bled away on Thursday, and profit-taking kicked in. Bitcoin's behavior is the second part of the equation. The cryptocurrency had been holding firm above 115,000, but on Thursday it struggled to push decisively higher. Some reports even flagged that Bitcoin ETF inflows had reversed, with outflows of more than $50 million in a single day. That kind of capital rotation can spook traders who are always watching liquidity signals. When money starts flowing out of Bitcoin ETFs, miners tend to get hit harder than Bitcoin itself because of their leveraged exposure. If Bitcoin is stable but not surging, and if ETFs are seeing outflows, then miners are often the first-place traders cut risk. That's exactly what we saw reflected in Cipher's price action today. There's also the reality of how technicals play into a stock that's had such a strong run. Earlier this week, Cipher broke through resistance around $11.30 and then again around $12. Those are significant levels, and once cleared, they invite a wave of buying from momentum traders. But once the stock climbed to $12.38 on Wednesday, it was sitting at a short-term high, and many traders will have had stop losses or profit targets set just below that level. When the stock failed to push higher on Thursday and Bitcoin didn't provide a new tailwind, profit-taking orders likely kicked in. That kind of technical retracement doesn't require bad news. It's just the mechanics of markets where investors want to lock in gains after a hot streak. Cipher has been up more than 20% in just a few sessions. A 4% drop is well within the range of normal digestion. It's important here to remember what hasn't changed. Cipher's fundamentals remain intact. The company mined 241 Bitcoin in August, sold 42, and ended the month with a treasury of 1,414 Bitcoin. Its self-mining hash rate is running at 23 exahash per second, with a target of 23.5 by the end of the third quarter. The Black Pearl Phase 1 facility is already contributing nearly 40% of production, and efficiency is competitive at around 17 joules per terahash. These numbers didn't suddenly change because the stock was down 4% today. If anything, the operational picture continues to strengthen. When markets pull back in the face of good fundamentals, it often sets the stage for new opportunities. The AI and HPC optionality that Cipher brings to the table also remains a powerful driver of sentiment. Black Pearl wasn't just designed to be a Bitcoin mine, it was built with the ability to host high-performance computing workloads, including artificial intelligence. Investors are increasingly realizing that miners who can straddle both worlds, crypto and AI infrastructure, deserve a higher valuation multiple. That's part of why analysts have been raising their price targets on Cipher in recent weeks, and it's why investors like Eric Jackson have named the stock one of their top conviction picks. Today's pullback doesn't change that optionality. If anything, it may present investors with a more attractive entry point into a stock that still sits at the intersection of two of the most powerful market themes. So what should investors make of today's decline? A balanced view is necessary. On the one hand, it's a reminder that stocks don't move up in a straight line. After several days of strong gains, a pullback was inevitable. On the other hand, the reasons for today's decline don't appear to be company-specific or fundamentally negative. They're mostly about macro digestion, Bitcoin flows, and technical retracement. Unless Bitcoin takes a sharp turn downward or Cipher issues disappointing news, the broader thesis remains intact. Looking ahead, the key levels to watch are fairly straightforward. On the downside, 1150 looks like an important support zone. If Cipher can hold above that level, it suggests that buyers are still willing to step in on weakness. On the upside, the $12 mark remains a psychological hurdle, and breaking back above it would signal that today's drop was just a blip. Traders will be paying close attention to Bitcoin overnight and into tomorrow's pre-market, because its direction will likely set the tone. If Bitcoin can regain momentum and hold above 115,000, Cipher could easily bounce back toward 12 and beyond. If Bitcoin weakens further, then Cipher may need more time to consolidate. For long-term investors, the message is clearer. The Fed's shift toward easing remains supportive. Lower rates reduce borrowing costs, make future growth stories more valuable, and boost risk appetite. Bitcoin remains elevated at levels that make mining very profitable. Cipher is executing on its operational goals and building infrastructure that could serve not just crypto but also AI and HPC demand. And prominent investors continue to validate the thesis by including Cipher in their top picks. A 4% drop in that context looks more like noise than signal. That doesn't mean risks should be ignored. Bitcoin remains volatile, and a break below key levels could drag miners down quickly. Energy costs are always a concern for mining operations, and regulatory scrutiny around both crypto and AI infrastructure is increasing. Execution risk is also real. It's one thing to plan for AI hosting, and another to deliver it profitably. These risks are why investors need to size positions appropriately and avoid chasing short-term rallies without a clear plan. But within those boundaries, Cipher remains a compelling story. So if you're thinking about how to frame today's action for a video, the angle is simple. Cipher Mining had a pullback, but the reasons behind it are not alarming. This was about market digestion, profit-taking, and crypto flows, not about Cipher losing its edge. The fundamentals are strong, the macro backdrop is still supportive, and the AI optionality continues to add value. The pullback might even be healthy, resetting expectations and shaking out weaker hands before the next move higher. Investors who understand the long-term story can use days like this to reassess, refocus, and potentially build positions at better prices. To wrap it up, Cipher Mining dropped 4.3% today, but the story hasn't changed. Bitcoin's behavior, Fed policy, and company execution remain the big drivers. The stock is still near recent highs, still backed by strong fundamentals, and still positioned at the intersection of crypto and AI. If the triple catalysts we've discussed in earlier sessions continue to align, this pullback could just be the pause that refreshes. The next few sessions will tell us whether today's decline was just a bump in the road or the start of a bigger consolidation, but for now the outlook remains bullish, with a healthy dose of balance.